My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do one of my friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let me give you a glimpse into the market's mindset on a day like today, where the Dow gained 349 points. The S&P jumped 1.43%, and the NASDAQ roared ahead 1.931%. Huge day. It's like Wall Street is saying, okay, enough with the oils. We're sick of buying the copper stocks. Even the fertilizers at this point are turning us off. Give us something new. Give us something fresh. Give us something that hasn't gone up yet. That's what we want. It might shock you, but that's the real mindset right now. That's how it works. It's the way hedge funds actually think. And hedge funds seem to be the only players in the game right now. Volume is very low. I'm not seeing a lot of institutional interest in stocks right now. How do I know this works? Because I lived it for years. So let me take you behind the curtain and show what it was like to work at a hedge fund with a hard-bitten trader, someone who chewed nails for breakfast and made me wear the Post-it note of shame for lunch if I screwed up on a stock. Yeah, she'd stick that stock symbol right on my forehead and make me go get a soft pretzel outside with a Post-it on my head. Yep, we're talking Karen Cramer, who ran the trading desk, and she certainly looked at things differently from me. She was arbitrary, mercurial, and belligerent, which is probably why we were such a good team. On a day like today, she might say, hey, that guy Williams you keep talking about, whatever, that Larry, he says that every time the S&P has a 50% retracement of its previous decline, the market's actually up a few months later. So we got to buy stuff. We got to buy stuff that's beaten down, that makes people, the stuff that people hate. And I would say, well, that's a perfectly good set. That's some criteria. And she'd say, let's buy that dog Intel. That hasn't done anything. I mean, that guy's all over the place making foundries. He's in Congress and getting applauding him and stuff like that in the State of the Union. And my response would say, no, not in your life. No, we're not going to buy Intel. We're not going to do that. And she'd pick up the phone and she'd call a broker and say, hey, buy me 100,000 shares of Intel 50 top. And then she would say, what else is beaten down? And I like, well, what doesn't obviously matter what I say. I'd say, okay, how about Estee Lauder? Stock's down 100 points from its high. And she would say, you know what? I like that MAC makeup. Let's buy it. Another interesting criteria. So she hit the Goldman Sachs wire, and when the voice on the other end picked up, she'd say, buy me 50 Lauder, 276 top, meaning buy 50,000 shares of EL, and I don't mind paying a higher price. And that, by the way, is how a $273 stock changes directions. Of course, it's not always that simple. I do my usual hand-wringing. If I were running a hedge fund right now, I'd be worried about Ukraine. But she'd be worried about missing the rally. Anyway, you get the window to the derision, the duality of human nature, and the volley scene from Strangers on a Train all in one. Right now, you're seeing a similar dynamic playing out all over Wall Street. That's how you get a rally like today. Now, why does it work? Let's be a little less glib, although I did wear the Post-it on my head for something like well, let's just say we'll save that for another time. Well, first, traders really do like to buy stuff that feels fresh and new. They do get bored with the winners and want new winners. Intel may be a semiconductor dinosaur, but with its yield near 3%, it certainly feels fresh and new to the hedge funds, which is how you get today's 7% run. The stock is cheap, and it's been de-risked because the expectations have come down to less than zero. Then there's Nvidia, up almost 10% today. We know there was a lot of what we call bad money that went into the stock ahead of CEO Jensen Huang's keynote speech earlier this week. Those weak hands blew it out when Nvidia didn't rally after his presentation. I say those traders wouldn't know a $1 trillion TAM, that's a total addressable market, from a $20 Tam O'Shanter bonnet. With those sellers gone, stock soared. I don't think it's done. Hey, then you got the limbo trades. How much lower can they go stocks? I mean, let's take DocuSign. Extremely profitable company, great software, down on its luck because it was the ultimate pandemic play. Yet we're coming out of the pandemic. You know what? DocuSign's lost 2/3 of its value, and it should be able to deliver terrific numbers. At these levels, it's fresh, it's new, and the only people who own it either somehow didn't know there was a pandemic or they're just mannequins masquerading as money managers. Now, in truth, while traders are often knee-jerk operators with the attention, say, the span of a mayfly, there are real fundamental reasons why these stocks do work. Now, Intel may no longer be the best of breed, but it is a good company. It's got immense cash flow. It spits out profits like a slot machine that hits 777s all across. Just monster. So it can be bought here. Probably bought tomorrow. And because Intel's a major component of just about every semiconductor ETF, when it goes higher, the whole group goes higher. Even its chief competitor, AMD, which is very much in a zero-sum relationship with Intel. This week's Intel's irrepressible CEO, Pat Gelsinger, is lobbying Congress to invest in domestic semiconductor manufacturing. He's a pretty compelling guy. We're taking, he wants $52 billion worth of subsidies. Maybe he gets it. If he managed to impress, if he wins over enough senators, then you can buy every single semiconductor equipment maker, from ASML to Applied Materials to KLA to Cramer Faith, Lam Research. Hey, for what it's worth, I'm betting Lam will have a monster quarter. Then you can circle back to the company that had the biggest beat in the semiconductor industry with a stock that deserves to be 20 points higher. I'm talking about Marvell Technology. We own this one for the childhood touch. You can follow us by joining the CNBC Investing Club. Marvell Tech excels in 5G and high-performance computing. Well, it's been crushed with the rest of tech, but now it's beginning to make a comeback, and it did have the best quarter of the season. Hey, how about that Estee Lauder? Sure, it sells at 36 times earnings. Expensive. But the fact is, CEO Fabrizio Freda simply doesn't miss. He's created a juggernaut that does well when you're wearing a mask and you get that veritable ring of pimple fire, so you need the best cleanser, and it does even better when you're mask-free and you need the best makeup to go out in the world again looking like your selfie best for Instagram or TikTok. Hey, shouldn't we be more worried about Ukraine? Yes. Does it make sense to buy anything here with Ukraine hanging over our heads? Well, maybe. See, I think this actually would be the worst time for Putin to pull something crazy. And President Biden just said we will respond in kind if he uses weapons of mass destruction. So that puts some upward limit on what Russia can finally get away with. Does it matter that the market's been up multiple days? Yes, it absolutely does. And that's why traders wanted something new and fresh. Not Archer Daniels Midland or Exxon, but AMD and Estee Lauder. The bottom line. The hedge funds are in charge here right now, which is how you get today's rotating bullishness. Hey, please, never try to overthink what happens in some of these rallies. Let's go to Rory in Louisiana. Rory!
Booyah, Mr. Cramer.
Booyah, Rory!
I'm a first-time, long-time.
First-time, long-time.
First-time, long-time, and one of the founding members of the investment club.
Oh, thank you. Thank you. Glad to have you aboard.
And thank you for going over Larry Williams' retracement this morning. That was very enlightening.
Oh, I'm glad. Yeah, that was our morning meeting at 10:20. I'm glad you liked it. Thank you.
Okay. The stock I'm going to be talking about has been up for the last 5 days, and the current price of WIN is 25% lower than my basis. My question is, should I nibble or hold on for a better exit price?
It's interesting you mentioned Larry Williams, because Larry told me that WIN just went into bull market mode. We've been wrong on WIN. I talk about some of the good ones. This has been very bad. We didn't see, obviously, what happened. It was going to happen in China. I think the stock is so low, sir. I mean, what is it? It's at $9 billion. It'll cost you $13 billion to replicate. So I'm saying you can nibble. Let's go to Anil in Virginia. Anil.
Hey, Jimmy. This is Anil Kakar from Virginia.
All right. What's up?
Thank you for taking my call.
Of course.
I just have a quick question about Lucid Motors. What is the long-term and short-term
okay, well, the market has changed, and you can own it for a trade. But remember, we are focused and have been since November on companies that make things and do stuff at a profit and return money to shareholders. That is not what Lucid does. How about Steve in California? Steve.
Yes, thank you for taking my call, Jim. This pertains to Ford Motor Company.
Yes.
My concern is about the aluminum prices. I noticed that they're running pretty close to their highs at this time. And one of the big manufacturers or producers of aluminum is China and Russia. And I noticed that Russia is on sanctions at this particular time.
Right.
And I wondered what your opinion is of Ford Motor Company.
Okay, well, Steve, we own a ton of it for the investing club. We did sell some much higher. I want to buy it back, but not yet because of exactly what you said. There's every raw cost that's into a car is much higher, and that is going to crimp profitability. Let's go to David in Kentucky. David.
Jim, thanks for taking my call. My question is regarding Upstart. They grew revenue in 21 by 264% and added $1.2 billion to the balance sheet. The Q4 report was outstanding and they announced the $400 million buyback. I'm seeing a change of character in the volume pattern. What's your opinion on me starting a small
Well, and what happened
Upstart?
is that there was a delinquency number that was too high that scared a lot of people out of the stock. I'd like to have the company back on to be sure that that delinquency number, if it's as high as what the analysts are saying, then you can't own the stock. I'm just going to be point blank. It's letting too many bad loans through. But we got to double check. I'm not going to give up on it. All right, hedge funds are running the show right now. And that's how we got today's rotating bullishness. Don't overthink it. On Mad Money tonight, T-Mobile has a new plan to innovate in the 5G space, so I'm learning more about the company's ambitions with the CEO. Then, what happened the last time the Fed hiked rates by 50 basis points? And should we expect history to repeat? I'm breaking it all down. And amid a booming agricultural landscape, is it time to think about AGCO? I'm going to talk to the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.